Hi, this is Jason Fielder with the Daily Forex Report for October 30th. We're looking at the US-Japanese yen pair. I'm expecting this pair to move between 99.84 on the high side and on the low side 96.31. Now look for some resistance to come into this market around 99.10 and for support to come in around 97.30. Now we're looking today, the market closed up as you can see, but it did form an inside bar, which gives us a possible opportunity for a trade. What I'm looking for is basically a break of either the high or the low during this next session. I'd prefer it to be the low, and I'll explain that here in a minute. But if it breaks the high, definitely looking for it to at least come up to this point, which would be around the 100 mark. I anticipate getting some resistance there, so if it hits that, breaks above that, hits that, I would definitely look to go to break even at that point. If it surges higher, great. If it doesn't, it pulls back against you, at least you haven't lost any money. The reason I'd like it to see it move down, even though it would be a rather large move and we may not get it, especially going into Friday session, would be that the move that we can anticipate on the break of the low would be at least down to this level around here, which would be roughly 150 pip move versus a 30 pip move. I'd much prefer to take the larger move, obviously. But if we do get a break there, look for it to move down to around this level, and we could take a profit. Now that'd be a pretty large move for a day, but as you can see, those days do occur, and they do happen. They can happen quite frequently. So that's kind of what I'm looking at for Friday, going into Friday's session. Now let's take a look at the Euro USD pair. This particular pair I'm expecting to move between 133.82 and on the lower side 126.94. Do expect to see some resistance around the 1.3000 level and some support around the 12800 level. Now if you notice, the market did surge higher, and if we move to a hour chart, you can see, let me zoom out a little bit. On our overextended trade, if you would have bought in pretty much at the open here and used a one-to-one stop to profit risk, 1-to-1 risk to reward ratio, you would have easily made your 35 pips on that move from the open of this session to yesterday's high. And it happened pretty quick. As you can see, it pulled back a little bit on this bar, but not enough to stop you out, and it definitely surged higher from there on out. So that would have been a nice profitable trade for you. Now let's switch over to the pound US dollar pair. This pair, so we've got to switch back to the day. Knew that didn't look right. Okay, here we go. I'm expecting this pair to move between 167.72 on the high side, on the low side 160.61, and I'm pretty much looking for resistance and support to come in at those same levels. So definitely keep an eye on those levels for this pair. This pair, like the euro, I believe is headed down over the next several sessions. We'll probably pull back, test the lows, and then push even lower is what I'm anticipating. Let's switch over to the US Swiss. This particular pair I'm expecting to move between 115.55 on the high side and on the low side 111.32. Look for some resistance though around the 114.50 area. We're almost there, as you can see. I do anticipate us hitting some resistance once we get to that point. Now as far as support, look for it around 1.1320. Now if you recall from yesterday, we had here again we had a overextended trade where we looked to go short at the open of this session. As you can see, it did go much lower than our low of our previous bar, but it did move up. So the question is, would we have been stopped out? Well, if you recall, when we were doing the video yesterday, during that time, the market had opened, gone lower, and then was pulling back. And basically, right around the time I finished the video, it was above above the open of the market. And I'd mentioned that if the market goes up and then goes up past the open, goes into positive territory for the session so far, and then pulls back down, that we could get a pretty quick drop straight through to our profit. And what happened, that's exactly what happened. Basically, we if you notice, we have the low here of the previous session at this point, and the market opened, went down, pulled back, and then went straight down through it. And you would not have been stopped out to answer the question, and that would have been a 56 pip profit on that particular trade. So with this trade and the euro trade 35, you would have come out with 91 pips on those two trades for yesterday's session. So not too bad for the overextended trade. Well, that about does it for the charts. Let's take a look at what has occurred. The U.S. had their GDP released for the third quarter. Year to date, last month it was at 2.8%. The consensus was is going to drop to negative 0.5%. And yesterday, if you recall, I said that I wouldn't be surprised if it hit that or lower. And sure enough, it did go lower. It came out at negative 0.3%. Looking ahead, though, we have the Eurozone CPI for October being released tomorrow at 6 a.m. Year to date, it looks like it's dropped from 3.6% down to 3.3%. The Canadian dollar also has their GDP for August being released tomorrow at 8:30 a.m. And the consensus is that it has dropped from 0.7% to negative 0.3%, which is a pretty good drop for the Canadian dollar. Most likely you'll see similar reaction that you saw in the U.S. today if it comes out at that or worse. Now, the U.S. has their personal consumption expenditures being released for September. The consensus is that it has dropped from 4.5% down to 4.2%, and that's being released at 8:30. That particular news announcement typically doesn't move the market, but it's worth noting nonetheless. Well, until next time, this is Jason Fielder. Good trading.